In the world of trading, the journey towards success is often marked by patterns, each telling its own unique story. It's a bit like life, filled with highs and lows, ups and downs, and also moments where it feels like you're just going down the hill. But the truth of the fact is that, sometimes falling down is what we need in order to rise back up even stronger. Enter the falling wedge pattern, a chart formation that shows the market taking a step back to make a bigger and stronger leap forward. As one of my mentor always used to say, once the stock market is involved, the stock market is just like a device for transferring money from the impatient to the patient. Now, the falling edge pattern, or should I say the falling wedge pattern, is a perfect embodiment of this idea. It starts with a slow downtrend movement, but if you can hold your nerve and your patience, that temporal downward movement that the pattern is forming often leads to a powerful breakout. When the market finally gathers enough strength, that is when you enter. Now, don't get too caught up in excitement. It's not about buying the first moment the wedge forms. It's about patience, guys. It's about patience. Now, think of it like building a house. All right, you just don't see a house foundation or an uncompleted building and just get inside the house, because it's not safe for you and it will not be comfortable for you, right? And you are unsure of what might happen to you, right? So you have to wait for the builders to install doors, windows, roofing, and so on before you can confirm your safety, your comfortability, and your total security, right? So by the end of the building, you realize that the wait is worth it, right? So the falling wedge is just like the house example. Sometimes it looks like things are falling apart or not making progress, but in reality, they are actually setting up for something huge. Okay, now with all this being said, let's dive right in. The first question running in your mind right now is, what is the falling wedge pattern? Well, a falling wedge pattern is a bullish reversal pattern where the price moves between two downward sloping trends. All right, the falling wedge pattern is a bullish reversal pattern where the price moves between two downward sloping trend lines that are converging. All right, don't worry, I'm going to give you illustrations of how the falling wedge pattern is. If possible, you can even make a live trade so that you can see. The falling wedge consists of several key components, which each component is playing a crucial role in the development of this falling wedge pattern. Now, the first components are the two converging trend lines. All right, they are the two converging trend lines, which is the resistance line, which is the one above, and then the support line, which is the one below. All right, so these lines, or the falling wedge is being guided, or the chart pattern is being guided by these two converging trend lines. When they say something is converging, it means the lines are actually tending to meet each other at a certain point. All right, they are not like the equal sign. All right, they're actually converging. It means they are tending to meet each other at a certain point. That's just what the first component is talking about. And then if you don't know what a trend line is a straight line or a line drawn on a chart to connect two or more price points. All right, so since this is a trend line, let me show you. Now, since this one is a trend line, you can see over here it is connecting this place, this place, this place. All right, the support line is also connecting this place, this place, and this place. So that's just what a trend line is. All right, the trend line helps to show the direction of the markets. All right, it helps you to navigate the direction, whether the market is going up or down or sideways. Right, and another component that forms the falling wedge is price action. So price action refers to the movement of crypto price over time. All right, so price action is used to analyze and make trading decision based on patterns of charts. All right, so what they actually mean by price action is just typically movement of candle. In essence, movement of candlesticks are what price action actually means. Like the price is high, or should I say the price was high over here. There are more longer candlesticks, and as time goes on, it begins to reduce in momentum. Like the buyers and the sellers are beginning to exercise little or lesser power or force in buying and selling that asset. So that's what price action typically means. All right. So during the formation of the falling wedge, price action gradually becomes compressed, just like I told you right now. All right, so it means that the candlesticks are gradually becoming shorter from this point. Okay, they are longer from this point, and then they began to get shorter when they started to reach the converged area of the trend line. All right, and the third part, okay, the third part of this, or the component, is that it has a breaking point, okay, a breakout point, just like you're seeing over here. So this is the breakout point. So the pattern is considered complete when the price breaks above the upper trend. Okay, so as we've illustrated, or as we've shown you, this is the upper trend, right, which is the resistant trend, the resistant line. Okay, so if the price, which is the candlestick, if the candlestick breaks above this upper line, that is your breakout point. That is your breakout point. So this is the point at which you are considering to buy. All right, so this is just signaling a potential reversal or a start of a new bullish trend. So now let's go to my Bybit and do a live trade and see if this is actually going to work. So guys, we are now on Bybit, right? We are now on Bybit. The first thing you are going to do is navigate the trade section, all right, the trade section over here. That will take you to either futures or spot, depending on the one you want to trade. We all know what spot and futures means. I don't have to explain that, right? So you just click on trade, and this is the trend line I'm telling you about. This is the wedge, the falling wedge pattern. So as you can see, this is BTC USDT. All right, this is BTC USDT, and this is the 5-minute time frame. Okay, so on the 5-minute time frame on BTC USDT, there was a downtrend. So typically there's a difference, although there are similarities, but there are key differences between these patterns. There's a pattern called the bullish flag. It also looks like the falling wedge, but there are differences. And there's another pattern again. It also looks like the falling wedge, but it is a bullish continuation pattern. This is a bearish pattern that tends to reject price. It's a bullish continuation pattern. We'll talk about that in our other videos. I don't want to complicate things over here. So the falling wedge typically forms, or always forms, during a downtrend. That is one of the difference between the falling wedge and the bullish flag pattern. All right, there's another one called the tenant, although we'll talk about that. This is the pattern. Okay, this is the resistant line. As you can see, it's connected this point, this point, this point, and then this is the breakout, right? And then this is the support line, which is the lower trend line. All right, and the lower trend line connected this point, okay, this point, and then this point, okay, and this is the breakout. This is the breakout, just like we saw in that illustration we did, right? So let me clear all this. As you can see, the components, okay, the components are complete. So whenever you spot this is when you actually want to buy. I am currently on this trade. It's a live trade. I entered the market. I can sometimes be a reckless trader. I entered the market even before the breakout started. I should have been in, let's say, $5 or $10 profit now, since I'm using a leverage of 10x on futures. So this is futures, guys. Let's forget, this is futures. So I'm using a leverage of 10x. So the moment I saw the candle forming, I just took the opportunity to buy over here. All right, so I just bought the asset over here, and then drew the line even before I confirmed the breakout. But I'm not advising you guys to do something like this. It's sometimes reckless. Okay, so I'm just like somebody getting into an uncompleted building before the roof even gets over my head. So please do not engage in something like that. So all you have to do is patiently wait. Please patiently wait for the downtrend to form, and then this strong boost towards the upside. Okay, then the gradual reduction of price action. Okay, the gradual reduction of price action, and then the support and resistance line meeting and converging. Okay, when you get this, then you just wait for your breakout. Wait for your breakout. When the breakout appears, only then can you be able to buy. So when you buy, you just have to take profit accordingly. Do not be greedy, please. Do not be greedy, right? Because it's not about how big your profit is. It's about how consistently you keep making money in the market. at the end of the day, we want our wins to be more than the losses that we are incurring, because you cannot be 100% accurate on trade, right? You can there's no strategy in this world that will give you a 100% guarantee of a win rate. But at the end of the day, like I always used to say, we want more wins and lesser losses, so that our portfolio can gradually begin to expand. So typically I'll just wait for the price. Okay, I'll just wait for the price to move up ahead or above, and I set my take profit at 95,870. okay, and I am currently on a $1.59 profit. Okay, so what I normally used to do is that I just measure the high and then measure it to this place where I start my the support line. Okay, and then the height between this high and where I started drawing my support line is just going to be the same as from the breakout to where I want my take profit to actually be. All right, so that's just how I used to measure my analysis, or that's how I used to do my analysis. I hope this video helps, and I hope you have a nice day.
12 reasons why trading is worth it. You are your own boss. You eat what you catch. Your time is your own. In the long term, you will be paid for your hard work. You will benefit from the stubbornness of others, instead of being a victim of it. You can finally earn what you are worth. It's a business with no inventory, little overhead, and no employees. You can trade from wherever and whenever you want. No commute. You can work in your pajamas. Your destiny is in your own hands. It's the greatest game on earth, and you are paid to play.